Good morning and happy Sunday, degenerates. Welcome to another episode of The Market is Fine Until It Isn't. It's MLK week. Markets are closed tomorrow, but Wall Street doesn't rest. It just stress refreshes futures on its phone. We're coming off a week where the S&P 500 went nowhere, the NASDAQ was sulks basically, and the Dow pretended it's 1998 again. And finally, the Russell 2000 hit record highs like it just discovered steroids. And now we head straight into the teeth of earnings season with Trump heading to Davos, Netflix and Intel on deck, a Fed chair search that looks more like The Bachelor and Monetary Policy Edition, and a market quietly screaming, please don't break anything this week. Let's go ahead and talk about what actually matters, not the headlines, not the vibes, the positioning. So let's kick things off with the market vibe check. The S&P 500, well, it pretty much landed flat, just like your girlfriend, dead and emotionless. The NASDAQ was down 0.4%. Software stocks are getting straight bullied right now. Dow is leading gains like it just found religion, and the Russell 2000 has new highs multiple days in a row. What is the translation here? This is not a risk-off market. This is not a panic market. This is what we like to call in the business rotation market. Capital isn't leaving stocks, it's moving sideways inside of the market. Small caps are ripping because they're domestically focused, less exposed to global chaos, and benefit from the idea that the US economy might actually, not collapse. I know, shocking that IWM has become the adult in the room, right? Now, Wednesday morning, President Trump hits Davos, which is basically Coachella for billionaires who hate taxes. This matters for three reasons. We've got reason number one, geopolitics. Venezuela drama, Iran tension, Greenland randomly entered the conversation, and tariffs are now back on the table. Markets don't fear chaos, they fear unpredictable chaos. And that is, if we could sum up Trump's presidency so far, and granted the dude's only been in office, I think, a year officially now, it feels like he's been in office already for 4 years. This has been the craziest last year with all of his announcements and things that just have not gone right. Number two, we have policy sound bites. Credit card fee caps should be mentioned, housing affordability should be talked about, and tariffs, trade, and energy obviously will be brought up as well. And the Fed chair elephant in the room, which is going to go ahead and bring us to the Fed chair soap opera. Welcome to it. Fed chair search is now officially a prediction market. Thank you, Kalshi and Poly Market. So if you want to see what's going on, just go to Kalshi and see where people are parking their money. According to Poly Market, though, Kevin Walsh has 60% odds. Kevin Hassett, who is basically friend zoned by Trump publicly. This matters because Walsh equals, hawkish credibility. And Hassett pretty much was the poster child of policy continuity. Markets want control and not chaos. And after the Powell subpoena drama last week that we covered in our last videos, bond markets are basically saying, we don't care who it is, just don't torch Fed independence. Any Davos comment about rates equals, instant futures volatility. Now, next up, we have earnings season, and I'll do a deeper dive on these, but this is just to give you a little taste, a little taste into what we're going to be getting into. First up, Netflix. Yes, that subscription where the directors absolutely destroyed Stranger Things. That was the worst season ever, by the way. But guess what? It is not about subscriptions or subscribers anymore. They're about M&A drama, Warner Brothers Discovery takeover rumors, competing bids, cash versus stock, aka a balance sheet, and who's left holding cable news baggage. Netflix wants studios. They don't want cable, news, and legacy debt. If they sweeten that bid with cash, go ahead and expect fireworks. Next up, Intel. Intel is the sneaky market tell this week. The stock is up 100% since the US government took a 10% stake. Intel became a national security asset. And Intel earnings are going to go ahead and tell us, is AI demand real beyond NVIDIA? Is CapEx actually flowing? And is this a manufacturing renaissance or a bailout cosplay? Because I can't tell the difference at this point. If Intel guides strong, the AI trade broadens. If Intel stumbles, software stays under pressure. Now, let's talk about the great 2026 rotation that we're seeing happen right before our eyes. Winners, we are seeing IWM, equal weight S&P, hardware, energy, infrastructure, defense, mining, and power. Those are our winners. The losers are software, SaaS darlings, high multiple stock stories. Names like think ServiceNow, Adobe, Salesforce, Intuit, App Annie, all getting smoked. Why? Because AI is no longer a software story. We've been there, we've been told everything we can be told about it. So people are over it. They don't want to hear about it anymore. Okay? It's a hardware, power, materials, and labor story. AI needs the following: electricity, chips, cooling, metals, defense, infrastructure. That's why Bloom Energy is up 60%. Defense names are ripping. Mining stocks are starting to catch those bids, and gold staying in the bid. This is AI phase 3, and it's way less sexy, but it's going to be way more durable, okay? Now, people keep asking, is the AI trade over? Well, before you start saying that, no, okay? It just left the Magnificent Seven's couch and moved into the basement where the generators are currently humming. The leading S&P names year to date are Intel, Lam Research, Western Digital, and SanDisk. Hardware, picks, shovels, power, okay? That's exactly what you're looking at right there. Same theme, just a different expression now. So let's go ahead, talk about our economic calendar for the week so you know what you're getting into. Monday, markets are closed because it's MLK Day. Tuesday, we're going to get ADP employment, Philly Fed, and Netflix earnings. Wednesday, we're going to get mortgage apps, housing data, and the Davos speech. Thursday, we get GDP, PCE, jobless claims, and Intel earnings. And Friday, we have PMI and consumer sentiment. So Thursday decides the week, PCE decides the Fed narrative, and Intel decides the AI narrative. That's the long of the short, right? So here's the setup. Markets, well, they're near highs. Rotation, not liquidation. AI trade is evolving, not dying. And earnings is about to expose who's really bluffing their hand. This is not the time to chase headlines. This is the time to watch where capital is quietly flowing. Because when the market stops talking loudly, it starts telling the truth. I'll see you dirtbags after earnings. Make sure you're subscribed to Trades and Gains on Substack, YouTube, Twitter, and this is powered by Investor Central Club. Currently running a code. Use the code STACKSAPEX20 to get 20% off your first month of Stacks software. It is the best options flow software in the game right now. Gives you actionable and easy insights to read, so you are not getting lost in the sauce, and you can tell when funds are starting to position and rotate, okay? Anyways, that's all I got for you this Sunday morning. Go enjoy some football for me, and I'll catch you guys in the next one.